I was 19 when my father proposed, "Let's collaborate on this," and 20 when I actually engaged. And he directed me, observing. We initiated from scratch in a single-room office the size of a closet. My dad's middle name is Miles, and his companion, who loaned us $60,000 in addition to my parents selling their life insurance policies. His middle name was Frank Happen. He specified there's going to be one regulation and only one, because I'm not going to allow you to replicate the same mistakes that I did. And that is, you'll purchase something, gold or silver, every 2 weeks, and that's all. I replied, well, if that's the sole guideline, it's simple to abide by, let's proceed. I've virtually been the exclusive proprietor of the business for 2 decades. My father is still present, and he's my collaborator in numerous aspects, and we communicate extensively. However, it's my responsibility to manage the business, and I have respected my pledge to my father, buying gold and silver every 2 weeks for 33 years without fail. I have never missed, at any time, a 2-week interval, and thus, to grasp the way I perceive metals, I believe it's significant before delving into any queries you might have. And that is, I view it as wealth. For me, it's not an investment. It's wealth I hope I never have to utilize. And if I do, I'm incredibly relieved I possess it. And if not, I am aware that the legacy I leave for my children will embody that. Even in the year 3000, when my descendants are utilizing the gold that I passed on to my kids, it will signify wealth long after the currency notes in our wallet are showcased in the Smithsonian as an example of what was. I think part of pursuing things is FOMO. It's the sensation of, oh, gosh, I know as much as that individual, and they succeeded. I must get involved in this as well. Trends typically materialize well before they become apparent. As an example, the most sophisticated investors globally, the central banks, sovereign wealth funds, and commercial banks, are depleting the exchanges. COMEX, the LVMA, the ETFs, Shanghai Metals Exchange, they're encountering record deliveries. Concerning the ETFs, only the authorized participants can withdraw metal, and they're exploiting the suppression of the Western paper markets as a cover. However, when you witness the central banks, over 15 months, purchasing more gold than ever before in history, and actually, if you go back to 2017, we observe a pattern of central bank procurement using the suppression of the Western paper market to cover massive acquisitions, draining the exchanges to the extent that not just in precious metals, the London Metals Association, London Metals London Bullion Market Association, the LBMA, observed more metal withdrawn from its exchange last year than ever previously. We observed 90% of its zinc taken out, 75% of its aluminum, and so much of its silver that they issued a memo at the start of 2023 stating that if withdrawals persist the way they were in 2022, by the end of the year, there'll be almost nothing left for us to withdraw. When discussing significant withdrawals from COMEX or the LBMA, or bypassing the ETFs, these are highly astute traders doing so. The big money is discreetly positioning itself ahead of the curve using the suppression of the metals markets, which are well recorded, and it's exceedingly exasperating to see a handful of large commercial banks repress the paper price of gold. Just to provide an instance, a week ago Friday, I haven't checked since, but a week ago Friday on COMEX, there were 95,000 September contracts still unsettled in silver. On COMEX, 95,000, which represented 474 million of silver. The peculiar thing is there's only 30,000 ounces, 30 million ounce of silver and approximately 30 million ounce in the registered category on COMEX. Those are the bars available for delivery as per the contract. So explain to me how on earth you can have 30 million ounce supporting 474 million ounce in paper claims, should they stand for delivery. That's termed rehypothecation, and it enables the exchanges to influence the price based on its derivative, rather than the original design of the exchanges, where the commodity itself would ascertain the price, not the futures market, and the capability, with tremendous leverage, over 30 times leverage, to manage the paper price. And influential entities like the commercial banks, they are aware of everyone's positions, their vulnerabilities. They can depress the price by selling short, offloading numerous contracts onto the market, and persuade everyone to sell, or they can operate differently. The essence of it is that it's akin to a casino. And because they've employed this to their advantage, you witness the markets being depleted by the most sophisticated investors globally. By the time the public realizes it's a trend, whenever that trend gains momentum, for any reason, well, the insiders will have been present for several years laying the groundwork and forming their value strategy. So I suppose the crux of the matter is that if you aim to be someone who prospers in investing and isn't perpetually chasing, then you have to dedicate ample time to investigate and comprehend the basics, the comprehensive picture, rather than solely focusing on the price movements. Because I would argue the price is the most significant tool of distraction available. And if you aim to mislead the markets, you do so through the price, which obfuscates the crucial fundamentals. Hence, for me, fundamentals hold more importance than price. However, you must genuinely believe that the research you've conducted and the fundamentals you perceive will ultimately unfold as you anticipate, instead of solely considering a price that currently contradicts world events. Thus, whether we discuss precious metals or any other investment, conduct thorough research. And don't just chase the price or follow your friend's advice, assuming this is the place to invest. And then, you undertake it. In that regard, you have only yourself to hold accountable. Whether we consider the BRICS or the West, I am convinced gold will ultimately play a role in anchoring to a new system. Let's start with the West. Prior to addressing your query about the BRICS, well, initially, if we reflect on 2019, recall I mentioned that the banks were purchasing gold in 2017 and 2018. They also engaged in substantial repatriation of their gold. The German Bundesbank, the Bank of Austria-Hungary, Turkey, Poland, the Dutch National Bank, the Czech National Bank. All of these banks not only embarked on a buying spree commencing in 2017, but they also repatriated their gold from the New York Fed and the Bank of England abruptly. In 2018, those same banks collectively bought more gold than they did in the preceding 60 years combined. And in 2019, those figures doubled. And then the Bank of International Settlements reclassified gold as the world's only other Tier 1 reserve asset. Thus, since the conclusion of World War II, US dollars and treasuries have stood as Tier 1. That's it. The BIS, which is the central bank, the most influential bank globally, not only informed us that by 2025, every country requires a functional CBDC, but they also, in 2019, reclassified gold to a Tier 1 level, which is remarkably pertinent once you comprehend the efforts that the central banks have exerted to suppress the price and amass the tangible metal.